Welcome to Leaders in Action. I'm Robin Trimingham, and my guests today are Olderhood CEO Bill Story and Martin Gilbert, Chairman of Aberdeen Standard Investments. Today we're talking about potential long-term impact of the current world pandemic on the investment world. Welcome, gentlemen.
Hi.
So it's fair to say that investors, be they corporate or individual, are very, very sensitive, very concerned about where is the safe place to put their money right now. And a lot of them are really unsure about whether they should put them into securities or bonds or mutual funds. So let's chat about what is going on in the investment world at the moment.
No, you're right, Robin. The hardest job in the world at the moment is to be a CIO of one of these big investing institutions. So the trends we're seeing, equity markets keeping going up, just as more and more liquidity goes into the market. Everyone's terrified by the levels of market, doesn't want to not be in the market. Mm-hmm. Obviously, bonds look expensive globally, a lot with negative yields. So we're seeing a trend, especially amongst big investing institutions, of moving assets from public markets, i.e. equities and bonds, into private markets. So property, hedge funds, private equity, these sort of vehicles are attracting more and more of, especially long-term savings. So the Canadians, for instance, would be at the forefront of this, investing in student housing in the UK, all sorts of asset classes, airports. So yeah, definitely the trend is just looking for somewhere safe to put your money at the moment and trying to ride this equity market while it's still going up.
So diversification's the name of the game right now then?
Yeah, I think so. I mean, although oddly enough, it would pay not to have diversified to be 100% equities. But I think that's obviously a dangerous game to play. So we're definitely seeing more and more money shifting out of public markets.
But if if the bubble bursts, so to speak, from a time perspective, in as much as the capital markets don't necessarily dry up, but the borrowing ability, is reduced simply because over time, the revenue side on the company market or the corporate side, if their sales is in this sort of decline mode, as we've talked before about hospitality, aviation, etc., isn't there a point in time where they meet, there's a crossroads that, they just can't keep going? Therefore, that would reflect itself in things like equity value.
I think that's why I genuinely believe being an active equity asset manager is the place to be over the next few years, because there is going to be such diversification of earnings within the equity sector. As we've talked about, hospitality, airlines are not going to do as well as, shall we say, supermarkets. So therefore, you've got to really make sure, even in the bond market, that you're lending to businesses that can afford to repay you, because clearly bond investors, unlike equity investors, are not looking for growth. They're just looking for people who will pay them back. So I think you just got to be very, very careful going forward. A, where you put your money in equities. B, what bonds you buy, and see what property you buy as well, because even though we all thought Amazon was a great company, none of us, I suspect, thought it would do as well as it has, and caused almost the demise of the high street as a consequence.
Yeah, it's been fascinating. You mentioned hedge funds a few minutes ago. In doing my research for this segment, I noticed that Aberdeen, well before all of this, maybe a year ago, had started to introduce a new policy regarding diversity in the workplace when it comes to investment managers and hedge funds. Talk to us a little bit about the thinking there.
Yeah, I think we're very, very keen on having a diverse workforce. And if I take gender just as an example, we've had two lady chief investment officers, Catherine Garrett-Cox and Anne Richards. And in fact, Anne Richards has gone on to run Fidelity International, the overseas arm of Fidelity. So we have a long history of diversity. I think there's still room for improvement, especially at the fund manager level, or the teams are still not as diverse as we'd probably like to see them. But we've invested in hedge funds which are run by ladies minorities, etc., women. So it's been a long-standing policy of ours to really try and encourage diversity.
I think this is a very interesting subject because I know the oil industry has also been looking at this for quite a while, because it's not just about diversity of gender, it's really about diversity of perspective, diversity of risk tolerance, all sorts of things, because when you're looking for creative solutions, and now's the time for creative thinking in business, the more heads you bring together at the table, the better, don't you think?
Definitely. And there is no question that a diverse team thinks more thinks differently from one that are all very similar, and they see risks, they see opportunities that are too similar have. So I'm definitely a believer in diversity and in teams.
We don't have a lot of time left, but I would like to just get a quick thought from you about the investment management company itself. Aberdeen is a massive player. It's one of the global leaders, both in the UK, obviously Europe, the Far East, all around the world. Do you see much change in either leadership per se or operating procedures that's been caused by this, and is also being caused by, as you guys have been talking about, the diversity issue? Does the investment management company see things differently now?
I think the key thing about asset management is you've got to do a good job for your clients. If you don't do a good job for your clients, you do badly as a business. If you do a good job, you do very well as a business. And I think you've also got to remember this is other people's money you're investing in, and how good or bad a job you do makes an enormous difference to the individual or the pension fund or the state pension fund that you're managing money for. So it's a huge responsibility you have managing that money, and it's one we take seriously. The active asset management business has had a tough 5 or 10 years because the index guys have done better. And but if active fund managers don't perform with this opportunity that's there at the moment, with, as we said, this huge disparity between how companies are doing, they'll never do well. So they've got to take this opportunity to perform for their clients.
Yeah, and I think obviously, things like promotion, promoting the company, saying we're good at this, we're good at that. I think obviously that's presumably has to change as well to address some of the issues that we're seeing in the community. And I mean that in a global sense, that it's not just a numbers game. It's not just arithmetic. It's based on arithmetic, but there are just so many other, tangible issues.
I think you've got to outline what you stand for as well. I think you've got to be distinctive to succeed now. And we were fortunate that we had Asia as the sort of thing we were most keen on early in a business, and that then went on to emerging markets, and then we merged with Standard Life, which gave us the huge strength of balance sheet that the combined operation has now. So it's I know I'm repeating myself here. You have to really tell people what you stand for, and now more and more people want to know you're looking at sustainability, and that you're looking at whether the company is doing good that you invest in, whether it's not doing bad things, whatever it might be. So customers want to know what you're doing.
Well, thank you, gentlemen. We're all out of time here. You've been watching Leaders in Action. Join us again soon.